2020 was a crazy year. During it, we had a global pandemic. Literally, the entire world ground to a halt. Governments around the world went ahead and shut down their economies. They mandated people sit inside and try to prevent the spread of the virus. Well, when all of a sudden you slow down the velocity of money, you grind these economies to a halt, you say that there is no ability to go to work or to go and participate in a normal way. You have to do something because investors get scared. Those investors got real scared in March of 2020. When they got scared, all of a sudden they started to sell every asset. It's called a liquidity crisis. During a liquidity crisis, an investor looks at their entire portfolio and they say, what do I own that I can sell today so that I can get dollars? The dollar is safe. The dollar is strong. I want to hold dollars in times of uncertainty. And so those investors started to sell every single asset they had in their portfolio that had a liquid market. If they held stocks, they sold them. If they held gold, they sold them. If they had Bitcoin, they sold them. Anything they could sell to get dollars, they were doing it. Equities went down about 25%. Gold was down about 15%. Bitcoin dropped 50% in a single day. Whenever you have a massive sell-off in the market, and then you have that overlaid with the uncertainty of running a business and having to actually get rid of employees and costs, or whether they're labor or their actual production cost, now you have fear setting in. You have this ability where businesses and their employees do not know the future. At that moment in March of 2020, the federal government and also the Treasury and the Federal Reserve all came together. They had a bunch of discussions and they finally decided they were going to take action in a variety of ways. This began the great manipulation of the monetary and fiscal policy. What we saw were two emergency rate cuts where we brought interest rates down to a zero rate environment in the US. We also saw the printing of trillions of dollars, and it was stuffed in every corner of the financial system. At the same time, some of that money, some of those trillions of dollars went to unemployment boost, but some of it also went to very exotic elements of the financial system where there was repo markets and all sorts of other things that were occurring, whether it was through monetary or fiscal policy. They wanted to intervene. They wanted to step in. They wanted to help. But at the same time, they also said we have to give direct support to people. And so they sent out stimulus checks. Those stimulus checks ended up being $1,200 in the max in April of 2020. So you could earn up to $1,200 depending on your income in prior years. Those $1,200, if you held it today, would be worth much less. Inflation has been over 5% now for a number of months. That means the rate of the price growth of various goods in the economy has absolutely exploded. But if you got that $1,200 check as stimulus and you put it into Bitcoin, a finite asset, an asset that cannot be debased by anyone, it is not controlled by anyone, and you held it till today, it would now be worth over 10,000 US dollars. That's right, those stimulus checks, that $1,200 check, if you had taken it and you'd converted it from a fiat currency that was going to be devalued at a historic pace, and you converted it into an asset that no one could debase as a global store of value, that $1,200 is now worth over $10,000. Absolutely incredible to see once people start to learn, how do I actually store value? Wealthy people have been doing this for literally centuries. They take their currencies and they convert them into hard assets, whether it's real estate or some other type of commodity. There's all sorts of strategies that people employ. A lot of it is underwritten by what is their risk profile, what is their liquidity needs, and what is the ability to actually make money. What does the price appreciation look like as well? But now what we see is we have this digital decentralized currency. That digital decentralized currency has become a global store of value. It is accessible to billions of people around the world. And what people were able to do is they were able to take that $1,200 check, they were able to convert it from that fiat depreciating asset into an asset that cannot be debased. That asset is now trading at a much, much higher rate than it was previously. And so when you get that price appreciation, you not only get the preservation of purchasing power, but you also get the appreciation of purchasing power, which is exactly what Bitcoin has done. At high rates of inflation, what we saw investors do is they literally dropped gold. Gold is down 7% on a nominal basis. It's down double digits on a real return basis. And they instead chose Bitcoin as the inflation hedge. We saw Paul Tudor Jones in Q3 of last year say, if I am going to believe that there's going to be high rates of inflation, I want to own inflation hedge assets. But I think that Bitcoin is going to be the fastest horse. And so he allocated a single-digit percentage of his portfolio to Bitcoin. Ends up that Paul Tudor Jones was right. He was quickly followed with public announcements from everyone from Stanley Druckenmiller to a bunch of other well-respected institutions and individual investors. But the beauty of Bitcoin is that it is available to anyone. Literally, individuals around the world front ran all of these hedge funds and Wall Street institutions for years beforehand. All you needed was an internet connection. You could go on to the web and you could go ahead and you could purchase Bitcoin. You could convert some of your other assets into an asset that cannot be debased by anyone. So that $1,200 check that went out in April 2020 is now worth over $10,000. You can sit around and you can complain about what is going on from monetary or fiscal policy, or you can learn exactly what wealthy people do. You can learn how they protect their purchasing power, how they appreciate their portfolio, and how they continue to put themselves in a better and better financial position over time. That's what Bitcoiners have done, and that's what you can do. $1,200, April 2020, now worth over $10,000. That's the beauty of an asset that can't be debased by anyone else.